I just hit the go live button. So,
all right. Yep.
It's doing the same little line thing that happens with Facebook.
No, we're live. I still don't mind.
Oh, you can see us?
Oh, I can see that we're live. This is live on YouTube.
And like a bug. Oh yeah. Okay. It just goes live. It's doing the same little line thing that happens with Facebook.
So mute that or something?
Yeah. Right, so everybody who's watching, this is really cool because you get to see our first time going live on YouTube. So we're learning as we go. We just realized already one thing is the fact that you have to mute your microphone. So with that being said, if you have questions, this is Brent Simpson, Leon Noble. We are representing Investing Education Academy, and it's an organization that we've created, an academy that we've created to help educate people on the stock market, how to get into it, and for those who are already in it, how to truly prosper when in it. Leon, did I miss anything?
No, that was pretty much it. And one of the reasons we're going live here on YouTube is because we had technical difficulties once again with trying to go live on Facebook. So this is kind of our backup. So bear with us on this one.
So, if you have questions or if you stumble into this and you want to ask us about the market, feel free. Today we are talking about Stockpile, Stash, and the last one is what? Robinhood. And the reason we're talking about this, Stephanie Simpson, and we also had another
Lynette.
Shout
out to Lynette and Steph for the questions.
Yes. So we really try to answer the questions from people from our tribe, and today is no different. The only difference is we're going live on YouTube. So a lot of people are trying to get into the market. They don't know necessarily. There's so many players out there. The question becomes like, where do you start? Who's viable? Who do you trust? Who should you avoid like the plague? Who should you flock to? There are many other competitors out there, such as TD Ameritrade, Thinkorswim,
Charles
Schwab, E-Trade, what Leon said. And we just chose today to talk about Stash, Stockpile, and Robinhood. So we will do other lives on the other platforms, but those ones we're focusing on today. So again, if you have questions about those, feel free to drop it in the comments. If you're watching the replay, which many of you might be watching the replay on Facebook, thank you for the comments. Thank you for continuing to support us. And yes, we do have a YouTube channel. For those of you all who are like, I didn't even know you had a YouTube channel. This is it. It's Investing Education Academy. If you search for us, you will find us. And just look for Leon now because we're the face of the company.
Right.
I will dive right in. We looked and researched both Stockpile, Stash, and we have not only research, but we have experience with Robinhood. I have a Robinhood account, as does Leon, I believe.
Yep. And
so the question that we want to answer for you all is not necessarily which one's better, but just what are they? So this isn't that bash where we're like, oh, this is better than this one. This is really the informative video where we just talk about the different platforms and what they offer. So Leon, I've been talking a lot. I'll let you jump in while I do some housekeeping on the back end.
All right, so I'm gonna talk about Stash, and like I said, Lynette and Stephanie from our private Facebook group. Thank you for the questions. And this is kind of we kind of went back and forth in the comments of the post, but here's a little deeper dive into what they are. So Stash is actually a robo advisor as one big aspect of his business. And what for people that don't know what that is, a robo advisor is basically.
Hold on one second.
Go ahead.
I'm just realizing I can actually share this with our Facebook community. Oh. So I am going to share it. So before we dive too deep, let me get this out.
Okay.
And Robinhood. Stock trading platform.
Out on the fly.
It absolutely is. And so I can choose, it's going to our news feed, which is public, and it's posting to my story. And I just realized I could tag people.
Oh.
And I just realized I could tag people after I let the screen go. So this is as real can be right here, everybody. This goes to show getting it done beats having it perfect, because we still bring information about Stash, Stockpile, and Robinhood, and we're doing it through a channel we did not anticipate doing it through. In which case, I think we're gonna have to do some investigation to see if this is the route we want to go to in the future, because it gives us the ability to stream to both YouTube and Facebook at the same time. So if for any reason you hear an echo at some point during this conversation, just bear with me. I'm figuring stuff out while Leon kind of gives the initial breakdown of the first platform.
Yeah, so it's so talking about Stash, it's called Stash Invest. And Stash Invest is primarily, well, one of the sides of business is being a robo advisor. And what a robo advisor is, it basically, they're really good for newbies, right? People that are new to the market, don't really want to get their feet too dirty, their hands too dirty. They really want to have their hands held and guided to investments. So what a robo advisor does, when you first join Stash or any robo advisor, you're going to fill out a form, like most brokerages. And primarily what they're looking for is your risk tolerance, right? They want to know what do you how much risk are you willing to take or not take. Once you get through that, then what Stash is going to do is they're going to recommend a certain number of ETFs to you. Now, most robo advisors, they primarily recommend ETFs. They don't do individual stocks much at all. They're mainly ETFs. So based on your risk tolerance, they're going to recommend certain ETFs, and they're going to be in categories. So maybe like bonds, stock market, commodities, what have you. And from there, you'll make your selection and make your investments. When you think about Stash, though, Stash they actually do let you choose from individual stocks, but they're very limited. So just like the ETFs, they'll give you a category. So say consumer discretionary, technology, healthcare, things like that. And then underneath those categories will be individual stocks that you can choose from. But it has to be one of those stocks. It's not one that you can just go. So if you go out tomorrow and find a stock XYZ that you love and you want to buy it, if you come to Stash and it's not underneath one of those categories, you can't buy it. So you can only buy what they recommend. And
just so you all know, when Leon says ETF, it's an exchange traded fund. So just so you know what it is, it's similar to a mutual fund, but it trades in real time on the stock market. Most mutual funds, the way they work is they trade at closing. And so the only time you make the purchase or sell is on the closing of the market. So it's not technically real time. It's close of business day. And also most ETFs are, the funds are lower because there's less management required for the funds. So just so you know what that is in case you're listening.
Yeah, good point. So primarily robo-advisors, they basically present you with some investment options, then you make a choice from those options. Another thing they offer is some traditional retirement funds, traditional IRA, Roth IRA, and also checking. And those are some of the pros. And the cons for me, and for what I kind of researched, are the fees, right? So robo-advisors, because they're offering that service of providing you investment advice, of course, there's a fee attached to that. Well, Stash's fees are actually higher than the average for the industry. So I'm going to run through some of their plans. So the beginner plan is $1 a month, and with that you get the chance to invest through those ETFs, and also you get access to a debit account. So they'll issue a card, then you can use it like a regular debit account. That's on their beginner plan. Their second plan is called their growth plan. That also gives you the debit account. That gives you the opportunity to invest in those retirement accounts. Third one is kind of interesting. So the third one allows you, so they have a rewards program on that debit card, but it's not in money. It's actually in stock. So instead of being issued stock for your quote unquote points, you're actually able to buy shares in companies via those rewards. And that's through what's called fractional shares. And all a fractional share is a share where you don't have enough money to buy a full share, so you can buy a percentage of it. An example of it is if a stock is $1,000 and all you have is $100. Well, before, unless you had $1,000, you couldn't buy that stock. So say like Google's over $1,000. Google's $1,000, you have 100. You just couldn't buy the stock in the past. Well, now you can buy a fractional share. So if you have $100, you can now buy 10% of one share in Google. So your $100 will be in that stock, and you'll be able to benefit from the appreciation of the stock. So fractional shares allows people to buy pretty expensive stocks for a little bit of money. And that's what their reward program does. It issues this basically fractional shares in companies when you use the debit feature. The last plan.
One of the things I just want to chime in with, what I found out is one of the reasons why they kind of led to these fractional shares becoming so popular, it was based on dividend reinvestment plans, which didn't know. If anybody knows what dividend reinvestment plan, it takes the dividends of a stock that you own and then reinvest it into the stock, which buys you fractional shares. And so they started realizing so many people were signing up for these dividend reinvestment plans that there was a market for the fractional shares that were in existence. And as the market moved away from it being paper trades or actual tickets being written on the exchange floor, and it's all automated now, it's much easier to have market makers sell fractional shares because you can now put multiple shares together at once to sell a share, where before you might have been an outlier with a fractional share and just stuck because nobody wanted to buy it. So that led to the popularity of this fractional share buying.
All right, and just to recap, so a DRIP program, as Brent said, is just where you issue the dividend from a company that goes into your account, and if you're under the DRIP plan, what will happen is that dividend will automatically buy shares in the company that issue the dividend. So if you have Microsoft pays you a $2 dividend. That money won't go into your account; it'll go right back into buying, as Brent said, fractional shares in Microsoft. So just reinvest in the same company that issued the dividend, or you have the option of not being part of a DRIP and have the money just go into your account by itself. So the last plan that they offer is called the Stash Plus plan, and really the only difference between this plan and the previous plan, the growth plan, is that the rewards program is double. So instead of that rewards program issuing maybe fractional shares of say 10%, it would be 20%. So their highest plan, the bonus plan, is actually double. So the price of the plan, the beginner plan is $1. The growth plan, the second plan, is $3, and then their Stash Plus plan is $9. And like I said, on average, this is a lot higher than most robo advisors in the industry. So Lynette, Stephanie, that is one aspect of what Stash is, and Brent will cover what are you gonna do up, Stockpile or Robinhood?
Well, I'm gonna talk about the
the other half of Stash.
Yeah. The other part of Stash too is that it really has a strong desire to get into the banking side of business, where it's my belief that they're really using stock as their carrot. They want your money. They want to go into the money management, the banking, the finance side of holdings. So they really push their bank accounts, checking, savings, and in addition to that, similar to exactly what Leon said, the credit card that they issue has these gifts or business bonuses and credit card bonuses in the form of stock, which is very unique. But I think we're going to see a lot more of that in the marketplace. One of the things to think about when whoever you are, wherever you're watching this, is the change in our ecosystem. And especially when you start looking at older investors. Somebody 40 plus may think, oh, that's crazy. Go to a bank. It's no. Why would you want to go put your money in a stash or even a stockpile? Because I can go to my account and I can see the people I can engage. People don't necessarily want that anymore. And in addition to that, with this COVID-19 environment, it is pushing people towards understanding like, wow, it is actually pretty convenient not to have to drive around the world doing everything all the time. And it's going to be a lot of acceptance of the online banking systems. Now, what I believe is going to happen where Stash is going to be competing is some of the big players in the banking systems are going to realize they just need to bring into the fold a trading platform. And so, as they compete with like Stash, will they acquire them or will they crush them? That really becomes the question, because even going back to looking at HSBC, was it HSBC bank?
HSBC, yeah.
HSBC. They were one of the biggest banks in the world for a long time and predominantly online. So, it's already been accepted globally. It's just now people are adding this stock element and laying out these really attractive carrots by means of, oh, your points are going to be stock accrual. Okay, you don't have to buy a whole share, you can buy a fractional share, which means they're going to start like Stashes really now bleed into Stockpile now. This is the transition. Stash wants you to come in so you can create the banking side, so they can then get you on the fractional shares piece. Now, the fractional share system, like Leon said, with the robo trading, robo trading is a really new way of getting an advisor without getting an advisor.
It's basically it's a way for them to cut the cost of paying the advisor.
Yeah.
They have the system do it. Yeah.
So it's all run on algorithms.
Right.
Like everything's based on these algorithms in the back, and they change all the time. And that's what leads to age-based mutual funds. But that's a whole nother topic. So that's my take on Stash. I really think they really want to get into the banking system. And I think the carrot that they're using is the stock trading platform. Whereas though Stockpile is really, they want to be a stock gifting platform, but they're getting into the money game. So Stockpile, their lead-in was come to us, or originally their lead-in was come to us and you can buy these stocks as gifts. And if anybody knows, on the internet, and in traditional brokerage houses, it was very difficult to buy a paper stock. And to go in and get what's called a stock in street name, that's what they call it, getting something issued in street name. It was a street name was a certificate. And a certificate would be what you framed and actually gave as a gift. But when you get the certificate, now you need to get that stock out of street name and into a brokerage account in order to trade it. So the fees around that are exorbitant. And for that reason, I don't like things like Stockpile. Because you're talking about a $30 cost to, purchase a gift of a stock. Like, why would you do that? And, if you are going to go to a Stockpile account, then I would say just open an account for a child as a custodian and buy them fractional shares in that account. And if you are going to do that, for me, I would do it in Stash. So if I had to pick between the two of them, Stash is more established and it's a bigger company. Actually, we're going to drop a link comparing Stash to Stockpile in as many platforms as we can because we're in a lot of places right now. But I would choose Stash over Stockpile because you can still buy fractional shares, but Stash has a target demographic of custodians, custodial accounts, which accounts for children. And so if you were to do it in that platform, it's cheaper. And it's less likely that they'll just disappear. So that would be my pick for them. And that really, unless Leon, you want to jump in, that takes us to Robinhood.
Yeah, so Robinhood, I have a lot. I mean, I've had a Robinhood account now for maybe a year, maybe a little more than a year. And I moved some money so my primary trading account is TD Ameritrade / Thinkorswim, my favorite platform, bar none. But I moved money to Robinhood because they were the first ones to do the commission-free trading. So to cut some of my costs, I moved some money over there. And think about Robinhood. Robinhood is mainly for people that are a little more sophisticated because you have to go there. You have to know what stock you want to buy. You have to know the symbol. We would hope you've done some research on it, and you're picking the actual stock and or ETF yourself to buy. Unlike Stash, where they feed you the information, and say, "Hey, this is what we think you should buy based on your risk tolerance." Robinhood is just basically I'm going in there, putting the symbol, click the button, I'm buying the stock. But one thing I love about Robinhood, it makes buying very easy. It's very straightforward. It's a very slick application. Of course, there are no commissions. The other side of it is not just stock, but also options. So when all the brokerages drop their fees for stock down to zero, commission fees down to zero, most of them still have fees on options. But Robinhood, even their options are zero. So that's one thing I love about Robinhood too, is I can buy and sell options on Robinhood for free, unlike I think Thinkorswim, TD Ameritrade, where there's still I think a 25-cent fee per option contract that you buy and sell. So for me, out of all three of these, my number one would be Robinhood because of the ease of use, the no fee on options. I mean, there's no fees on stock everywhere, but the no fee on options kind of puts Robinhood over the top for me, and its ease of use. Stockpile, I'm not into gifting. I mean, for what you said, Brent, why go through all that? Just give the person you want to gift it to $30 to buy a stock, or 100. Like it makes that Stockpile makes no sense to me at all. And
so
Stash,
I mean, nostalgia of it. Most people, and in this day and age, I've done. So let me be very clear. I've actually done this process. So for anybody who has not bought a paper street name stock, I've done it. So this isn't hearsay. It is very difficult to get that as a licensed broker, I'm telling you, it is difficult to get that certificate out of street form. And the reason why most of the companies that will issue a stock are more normally bigger companies. Bigger companies pay dividends. What happens is when you get ready to get it out of street form, all of a sudden a dividend hits and it's hitting in what would have been street name. So while you're trying to transfer it out, the dividend is electronically en route to what was a street form certificate. And then it hits this street form certificate, which they realize, oh, well, we're just going to they're going to issue a check to you. So you keep getting these checks from what used to be a street form certificate that's now in a brokerage account, and you got to call to explain. It's a headache. It's cool. It's cute when you give the child the certificate, but again, I like Robinhood from the standpoint of it's a bigger company, it's established. I echo everything Leon said, so there's no point to repeat it. But on the for me side, the only drawback is the fact that if you are not a sophisticated investor and you are thinking, oh, well, this is a really cheap way to buy stock, I'm going to go do that. Cheap doesn't always mean less expensive, because as we know, you can have something that's cheap that requires you to buy 4 of them when you could have really bought something that was more expensive that's going to work the first time around, which means you're not wasting money. For anybody who makes a mistake, or there was a time period where Robinhood actually reached capacity or shut down for a small period of time. I know you want to say something about that, Leon.
Yeah, Robo had a terrible week about a month ago. I explained this in another live, but basically on the biggest update, following the biggest down day in the market, the Monday following that weekend on the biggest up day, Robinhood was shut down for essentially a day and a half, Monday and part of Tuesday. So people that lost money on Friday were locked out of their accounts and could not participate in the up move on Monday and Tuesday. So there was a big to do about it. I mean, to me, it's like whatever. Like I've been with TD Ameritrade. I've been with Thinkorswim since 2008 when they were kind of just getting their footing. They were a young technology company. They had hiccups too, but they eventually got bought out by TD Ameritrade for almost $1 billion. Very stable, and they still have issues now, but pretty stable platform. I mean, I love the platform. So no technology is perfect, as we can see right now. We're on YouTube because we couldn't get off Facebook because of technical issues. So nothing's perfect. But for me, for my trading style, Thinkorswim's number 1. I would say Robinhood's 2. And if we're going out of the ones we have here, Stash would be 3. And I wouldn't even really consider Stockpile.
Yeah, so I'm in agreement. So for everybody watching, I will go just for the sake of saying it, Robinhood, Stash, and then Stockpile. And like every week we talk about investing, and we think people should be investors. The advice we give on these lives are not intended as the end all be all of advice. You should do your research. Investing is very personable to each person. You need to look at your own suitability. Like, what are your risk factors? Are you using what kind of money, Leon?
Risk capital, word of the century. Only money that you can lose.
That's our 2020 word. We're just gonna have fun. So if you're not using risk capital, are you using diaper money? Are you using mortgage money? You should
Food
not
money. You shouldn't be using any of that.
So when we give advice, please do your research. Please see if it makes sense for you. But these are just things that we like. So do your research. And with that being said, we will give you our picks for today. So my pick is Teladoc, ticker symbol TDOC. Again, ticker symbol TDOC. I'll keep it very simple on this one. As we are in this unique environment, most people are only going to the doctor when absolutely not. However, we still have appointments to keep. We still need to be in communication with our doctors. Teladoc offers a platform that gives doctors the ability to handle the load, to talk to their client base, to provide services during the period where they can't necessarily see everyone. The reason I like Teladoc is they have a very established company. They've been in existence, I think, since 2010. In addition to that, the stability in the marketplace isn't going to be a fad. Like I feel strong. This is an I feel statement. So until we get to the future, we don't know it. As much as we can talk about predictions and what the information shows and graphs, we don't know who predicted COVID-19. We had regression analysis and Monte Carlo reports that told us the market was going to continue the trajectory of X, and then this happened. So one thing I can say is that if another thing like this happens, or if this gets worse, the people are still going to have a need to talk to their doctors. Once this is over, if it clears up, people will still have a need to talk to their doctors. A lot of individuals are realizing that it is extremely convenient to not have to go in for a runny nose or a muscle ache. They can just call in, have a reasonably good assessment, and then walk away. Well, not even walk away, go back to their couch feeling confident, because also a lot of these pharmaceutical companies are starting to do drone delivery services and some more stuff, which will add to our stock picks later on in the year. Check for that. But you know, the medicine will still get to you. The doctors are still providing the prescriptions for what you need. So I don't see the technology going anywhere.
I agree. I mean, I like the pick. I think it's almost future proof. I mean, to me, that's like picking any really solid healthcare company. I mean, even though it's a young tech company, I don't really know. I don't know if you know better. I don't think they have much competition really either. Being in the pure telemedicine space. I mean, I know some of the big companies are going to jump on at some point, but right now I think Teladoc is like the leading e-medicine company out there.
Yeah, but the only issue right now is some of the companies who claim to be competition, even Zoom, they're really looking at the fact that the HIPAA compliance piece.
Right now, I was about to say, and Zoom had the problem with the Zoom bombing, so that's completely not HIPAA compliant.
The other piece too is there's these things called NAIC codes, and you know, certain platforms understand that, and it can help with billing. Other platforms do not. So you know, when you look at, I don't think it's going to happen, but if you really looked at a technology company that could compete in that side, you might think like, QuickBooks, but I don't see them going after that marketplace in regards to the interface. So I think they are one of the companies that are here to stay. And at the very least, I think if a big boy truly got in and wanted to play in this space, they're going to buy him out.
Yeah, I was about to say probably a buyout. Yeah, more than anything. All right, so my pick is Broadcom, ticker symbol AVGO. It closed today at $276. They are a massive semiconductor chip supplier. The industries they mainly support or sell into are telecom, industrials, and technology. So one thing I really like about Broadcom is, so everyone knows Apple and everyone knows the iPhone. Everyone knows that, you know, that's the thing, it's the product to have. What a lot of people don't think about is the components that go inside of the iPhone, and the suppliers to that. So Broadcom is actually one of the largest suppliers to the iPhone. The price of the iPhone, anywhere from I think it's $5 to like $15 of that price is made up of Broadcom products. The chips, the antennas, some of the software. So that shows how big they are in the iPhone. In January, they signed a new deal for $15 billion, a new 5G deal with Apple that extends, I think, out 10, 15 years. So that's revenue that's not even counted right now in their numbers. Last year, they did $22 billion in revenue. The market cap of the company is $110 billion. And if anyone is not sure what market cap is, either go to or join our private Facebook group, because I posted an article there explaining market cap and why it's important when you're breaking down assessing a company. A few more stats. Their 2-year average on growth, on sales growth, is about 10%, and the 2-year average on profit growth is about 11%. Big thing though is in 2018 they raised their dividend by 51%. Now most companies, when they raise their dividend, it's anywhere from like 5 to 20%. Yeah. Broadcom rose it by 51% in 2018. And for people that don't know, dividends come out of net cash off the balance sheet. So for a company to raise their dividend that much, that shows, one, how much cash they have, and two, how secure they are in their business. So they just know that going forward, things are going to be great. And last point about them is they pay a 4.7% dividend yield, which is basically roughly 5%. And the analogy I gave last time is dividend yield is essentially the interest rate the stock will pay you every year, regardless if the stock goes up, down, or sideways. So if you were to buy Broadcom right now, and let's say it's paying 4.7, we'll just say 5%. If you put $10,000 into it now, if the stock didn't move for a year, you would still make $500. So you'd still get your 4.7 to 5%. So that's my pick. It's Broadcom. Ticker symbol is AVGO.
Yep, and I neglected to say my stock pick is Teladoc, TDOC. It's currently trading about $175 a share. And, you know, for anybody who follows us, know we have an article. You can actually go to investingeducationacademy.com now and see some of the blogs, but, you know, it's still building out the site. So just, you know, if you get there, just know it'll be some imperfections, but we want to get you the information. So we're going to post the links. I just realized we can post the links that I've been talking about today in the Facebook group, so I don't have to go through every single channel. So please visit our Facebook group at Investing Education Academy. So at Investing Education Academy, you'll find us on Facebook, and it's a private group. So just apply. We will approve you if it makes sense, and you know, you'll get all the information we're putting out there. And also, we'll put links. We should start putting links, Leon, to the stocks that we pick, like, you know, where people can actually go and see the charts. So
Right.
we can just upload those into the Facebook group, so you guys can have quick access to that information. In addition to that, I will put an article that compares stash and stockpile in the Facebook group, so you can do research for yourself. Anything else?
No, that's it. Our first time on YouTube. We got through it with technical difficulties, but we made it happen. So
yeah, I mean, this is entrepreneurship, and this is also our dedication to you all. If something goes wrong, it's not what went wrong, but can you find a solution? So, you know, this is our solution. We will share this link also inside of our Facebook group. But, you know, as time goes on, next month is our 1 month anniversary. And I think we should do something pretty cool for the 1 month. I don't know what it's going to be, but please check back with us. Yeah, and we'll start putting information in the group leading up to 1 month in business. So talk to everybody later. Hold up.